Friday, March 24th. Next week is the last week of March. This is Market Analysis, Stan Ehrlich. Good morning, 10:09 California time. So we do have almost 3 full hours until the close. I try to make my recordings around the middle of the morning, middle of the trading day, wherever you are. And I always start out with the stock market indexes, typically the SPY, the Spider, the S&P 500, and no difference this morning. We are basically unchanged. We are down a tiny few ticks, and that is going to turn green maybe in a moment, and red and green and red and green, slightly higher, slightly lower, unless we get a big move up. Right now, we're trying to bounce against a little resistance. Not that big a deal on the left chart, which is a 15-minute chart. So every 15 minutes, you've got a vertical bar, could be a candlestick, really doesn't matter. And we have a potential bottom forming, but that remains to be seen. I'm going to go into that if it starts to work out a little bit better, which I hope on Monday or Tuesday. Right now, we got oversold several days ago, and it was the low on March 13th. We rallied back up pretty nicely, all the way a little above 400 to 402 and 3/4, 402 and a half approximately, just this Wednesday, which did have a bearish engulfing. Now, bearish engulfings are almost always bearish and start a move to the downside. They're fairly reliable candlestick formation on a daily 1-bar formation. I love them. I use them a lot. They are part of my ER strategy, but we need to be in an overbought condition, and the RSI at the bottom of the screen is a customized relative strength index graphic in the sub-graph at the bottom, and we did not get anywhere near overbought. And for that matter, we're very, very neutral, almost smack in the middle of the scale of always 0 to 100. Right now at 40, 48, 47, 90. So you're not going to use RSI for any particular purpose at the moment, very neutral. But what I do like is that we made a little bit of a lower low today than yesterday, and yesterday than previous day, and we're not really getting that downside follow through that you might expect from a bearish engulfing on Wednesday. But the effect of the bearish engulfing hasn't been canceled, and you do that by closing above the highs of that bearish engulfing. So I need to close ASAP at 402.50 plus, 403 and higher, etc. And obviously, you can reach me at info@ersignals.com. Now, so I like the fact that since October 13th, the October lows, I talked about it a month or two in advance, almost every single day on my recording. We had a gigantic bullish engulfing green ER buy signal. It's an automated system on October 13th, and a whopper of a buy signal, and it was the bottom of the bear market of 2022, and so far the beginning of a bull market of 2023, which I believe is still intact. Not for the exact same reasons that I thought so a few weeks ago, which was the head and shoulder bottom. That kind of got ruined. So basically, we now have higher lows and higher highs over time since October 13th, which is the definition of an uptrend. Now we need to hold above the lows that were made in a support area on March 13th. If we close below that low, which was about 380.50, that would be pretty bearish, in my opinion. There's possibilities that I could justify being bullish, like extreme oversold condition or another bullish engulfing all of a sudden, even though we got below that low. But that remains to be seen. We're not going to do it. I think we're going to continue to work higher, and I am expecting now that we're a tiny bit higher on the day, just a few ticks, 5, 6, 7 ticks, meaning nothing. We want to get above yesterday's high and, of course, Wednesday's high. Then you'll be making new highs for a couple of weeks. And if it's on a closing basis as well, which I'm expecting, you have a new high close for a little bit more time, a couple more days. The real key here is getting up to 408, closing an old gap that happened on February 16 and 17, and staying there. 408 plus on a close would be quite bullish, intermediate to long-term period. So that's what I'm looking for, expecting 15 points or so higher. Let's see it happen ASAP. That's it. Let me go to the DIA. It is almost the same. We have a slightly lower low on the daily data chart on the Dow Jones, and that's the DIA ETF, and about the same as the S&P. So not too much new commentary here. Now, we have a double bottom instead of the October 13th only reversal, and we have a slightly different longer-term formation. So we really need to get above our bear trend line, which is that cyan line, approximately 338 at the moment for the next day or two. It does trend a little bit lower over time. That is going to be a major bullish breakout. We do seem to have a downward slanting channel in here, pretty close. I didn't draw the line across the bottoms, but visually you can tell it's about parallel, close enough to the bear trend line across the tops. Downward slanting channels are bullish formations, and they're bullish finally when they break out to the upside. That's a ways to go, and I think it's going to happen. And I'm going to correlate that with interest rate futures. We're going to show you in a minute. They're gaining ground today. In fact, the 10-year notes actually made a new high for months today. All right, we'll get to that in a minute. The DIA is looking okay at the moment. We got oversold. We started to work our way back up. I want to get above Wednesday's high, which was that bearish engulfing. And lastly, for the indexes, we're going to look at the QQQ, and the Qs on the daily vertical bar chart here did have a bearish engulfing ER sell signal on Wednesday. It barely got overbought, and there was an outside down day, meaning a bearish engulfing candlestick. So the color is now red for that day on Wednesday. It's an official sell signal, but I don't have any other corroborating information. I don't really like the fact that nothing else seems to be helping the Qs work lower, and so far they haven't even gone below Wednesday's low, the bearish reversal day. So we had an inside trading day yesterday relative to Wednesday, and today we basically have the same thing. You start to work above Wednesday's high, which would be 315.26. You will not only negate the sell signal, but you're going to be making new highs all the way back to August. So we have the higher lows, and we just had a higher high. Unfortunately, it did get overbought, and we have a sell signal. But again, I'm not trusting it very much. It hasn't started to work at all. So I'm going to pass on it at the moment. If it starts to work, I'll have to bring it into the conversation in terms of being bearish and look for other reasons to be bearish on other indexes. But that's not happening, nor is the market really going up either. But let's take a look at some of these other corroborating markets like the interest rate futures. And I'm going to now shift to our futures markets. Here's the 10-year notes, TY. We actually made new highs today since September, early September. We have a long-term sideways trading range developing here since September, when we had our first major bullish engulfing buy signal. It worked for a few days, and that's plenty of time to make some money on my strategy, which picks turning points that last sometimes only a few days and sometimes for a whopping many months. Way back on August 4th of 21, we had a red bearish engulfing ER sell signal way up at 134. We never saw the light of day. It trended lower and lower and lower until finally October of 22, we have a bottom. And a buy signal a couple of weeks earlier didn't work quite so well, but sometimes I get these buy signals in groups. This one happened to be a single one, and it really didn't work that well, but they occur around bottoms, but not necessarily at the bottom, which is common. And we didn't get a buy signal over here either. So I'm a little disappointed I didn't get any major signals. Well, we did get oversold. That's a reason to believe the market's going to rally. It did. And I did get a buy signal a little prematurely, an indication it was trying to turn back up. Now, what's important here is closing above that blue line, which was the highest high since January 19th. We got above it, didn't stay above it. We're not overbought, so there's no particular reason why we should come back down except for resistance. A few days ago, we stopped exactly at the line, and today we poked through it a little bit, but we're not staying there. So I'm not going to be surprised if we dip back down modestly next week. But any moment that we close above that little blue line, which is pretty much at 116.26, give or take just a few fractions, we're going to start moving up, should start moving up. Upside breakout, bullish, starting an uptrend, all the reasons. That's exactly what I expect to have happen relatively soon, which could be a few weeks. It may be any day. Next, bonds. I'll get to bonds. Gold market. The gold, silver, and platinum, we picked the low to the exact day in all three of them. And I told you about it. You saw it the day it happened. In this case, February 28th was the buy signal. It's green ER buy signal, right smack at the minor double bottom and the lowest of the two lows. A few days ago, we made the highest high, and we're still close to that, but we're yellow, which means overbought on rallies. So I am expecting a little bit more of a retracement back down. Nothing major, no major top, but probably, I hope, expect a little bit better buying opportunity if you are interested. The system got the bottom so far, and that's what I'm very, very happy about. We also got the top of the rally. We also got the bottom of the break right back here in September. We also got a major low back here on July 21, 22. Not too bad. Next chart is platinum. We got the bottom on February 27th. No surprise, it's the same day gold bottomed out. We also got the top back here on January 11th, and there are some great buy and sell signals that happened a while back. Because these green and red lines are trying to, and frequently do, pick modest, minor to modest, if not major, long-term turning points, many of these stand out like a sore thumb, like they should, because they start another move in the opposite direction they were going in. Next chart is silver. We got the bottom, and it was March 10th. Now on February 28th, we also had a buy signal that worked okay for a few days. And a few days earlier, we had a buy signal that worked okay for a day or two. Now, as long as it works for a day or two, there's plenty of time to make some money on the signals. But some of these take off like a bat out of you-know-where, and that was the one on March 10th. Today, we have a new high again in silver since the ER1 would have bought it around 20.40. And we are at 20. Current quote is 23 and a third, 23.37 and a half. That's a huge move. Love it. It's only been 2 or 3 weeks for a position trade. Next chart. Wheat. Today is the first day. Today is the bullish engulfing brand new buy signal in wheat. This changes the picture. I'm going to abandon my commentary about the bear trend. I'm going to start talking about this being a possible minor double bottom over a couple of 3 weeks. And we have a bullish engulfing ER buy signal today, period. As long as it continues to close higher than yesterday's close, that will stay green. And it's an official buy signal. And it has a minor upside breakout if we can get above the high on March 17th, which was 712 and a half. And we're 671 what did I say? The high was 712.5, right? And our current quote is 688. So it's not too far away. I think it's going to happen very soon, next couple, 3 business days before Wednesday of next week. And that's going to bump against some resistance. So this buy signal has got to be able to push above 730 on a closing basis. And then I hope that we're going to get above 812. That is a very significant longer-term bullish signal. But first, let's get up above the highs of the last couple of weeks and then above resistance levels. See if it can't continue to work its way higher. Next chart is another brand new buy signal in cattle today. I don't often get 2 new signals in the futures markets in a single day. No relation to each other whatsoever. This is not the lowest low, but I don't have to be at the bottom in order to get an official buy signal, which this is. So I'm turning bullish. Now, the trend is already up, and we were oversold. So this is no surprise, but it is a very nice thing to have this bullish engulfing ER buy signal. So this is it. I hope it's as profitable as the last really good, great buy signal that we had on September 29th, the bottom of a modest break in an uptrend, and it made new highs for the whole trend. I think there's a chance that this could happen again. Why not? Next chart. OJ is breaking out, as I told you, above the top of its pennant formation today. Now, this is not an ER buy signal. This is nothing but a minor upside breakout, but it does perpetuate the bull trend. I said before, for weeks now, pennant formations are usually continuation formations. The trend has been up, so I expected it to break out to the upside. I said exactly that just yesterday. So now we need to stay around this price level of 251. It might dip a little bit lower than this, but not much, and continue to make higher highs for the whole trend above 260 very soon. Next, I'm going to talk a little about heating oil. Major historical support has not been broken. A week ago, we got oversold testing the lowest of the 2 green lines. This other line is another support resistance level, which doesn't seem to be particularly important now, as it's been broken above and below several times. So I'm actually going to erase it. But this one is still very, very much important. And I could even draw a second one here. Just 1 second. Let's do that real quick. And that's a new parallel. And right there, below these 2 lows, these 2 lines are very important. Breaking below those 2 lines is going to be a huge bearish long-term breakout. Next chart is natural gas. Support for day after day now, last 3 or 4 days, has been holding. We're seeing just a little bit of strength today. I'm not sure if this is going to develop into a double bottom or not, but it's got the makings of it. We did have a perfect buy signal smack dab on the first low, and it worked out for about a week and a half very nicely. So coming back and testing the same level that we had the bullish engulfing at, which is support, is currently showing up. We can't, so far, break below that support level, but it's really not going up any either. So a little bit more patience, a little bit more rally will cause me to be a lot more confident that this is going to trend higher. I'm going to leave you with that. I don't have too much to say about the forex markets today and or the sector markets, but I will point out before we go, the E-mini the S&P 500 at the moment has started to rally a little bit more, certainly not very much. And we are now making a minor new high for the day, which doesn't mean that much, but at least we're not working its way lower. It's a Friday. If we close strong, that'll be good, supporting my friendly, bullish attitude, approach, expectations. And if it gets super strong, it'll get above yesterday's high, which would be fantastic. I frankly don't expect that. That's asking a bit too much. But stranger things have happened. So have a great weekend. Talk to you on Monday.